Good morning, everybody. And if you're in GMT, good morning as well. Let me see here. Oh, I wanted to say something here. Probably gonna pronounce this wrong, but I'm gonna try anyways. Um, had this all queued up. Okay. Let me try this. Let me try this. 新年快乐. 新年快乐. So, yeah, whoever knows knows. Whoever doesn't, you know. 新年快乐. Maybe that's better. Somebody can let me know later. Um, but I tried. Alrighty. I'll pass the microphone over to SPDas. He's patiently waiting over there. He's pumped up. He's fired up. We're fired up. You know. Another trading day. Well, at least for me, I just woke up maybe about an hour ago on my second round of coffee right now, and yeah, super excited. Love the charts. Love the code, and love you folks. Let's do this. Hey, SPDas, the trading floor is yours.
All right. Thank you, Igor, and hello everyone, and welcome back to the second session for the day. This is 28th of Jan, and we are just beginning in the London session around 5 a.m. Eastern Standard now. And let's start with this. Not much right back. Actually, we were expecting some slight activity, at least in the euro dollar index in gold, and that's what we are seeing even in the coins. So we've got to just touch base with day more overly, and I think we should be having one more leg lower in most of the risk assets, including gold, euro, and on the upside, the dollar index. And coins will have to revisit them. I might be becoming an aggressive short in Bitcoin, but we'll have to revisit that chart, and maybe we'll go flat again, or we'll initiate some partial longs. That's what I've strategized in the past couple of hours. So let's get started off with the euro hourly chart. Now I'm going to get that orange wave a bit shortened. We've gotten uh, we've gotten a nice little wave. It's working towards an impulse. It looks like that we've got wave one, wave two, wave three, and then sideways potential triangle in the making, wave four, uh, and wave five now. We can expect one more leg lower, possibly when we are back in the New York live, which should be there. Let me just try and see if the Fibonacci ratios are matching up, or where the Fibonacci ratios are pointing. That is around 1.04 handle as well. And did you see that Fibonacci second target, which is coming exactly around the previous wave for a one lesser degree? So I won't be surprised if there's one more dip towards 1.038090. And visibility, okay, I'll keep it up to 15 minutes and 1 hour. That's good enough. All right. So let's prepare for one more drop around 1.0435. So remember yesterday we took aggressive shots around 520. If you're still holding on those shorts, I mean you can place your limit orders. This is for aggressive traders who went short, and we were recommending three different strategies. One was absolutely aggressive. The second one was positional, where no change was, well, nothing was required to be done. And the other one was a short-term trader, where we booked profits on the long position. If you're in an aggressive trades and if you're actively still there, expect one more low towards 1.04 handle. Just be around slightly lower or higher than 1.40400, and That should be your first short-term aggressive profit booking. All right. And then we'll wait for a wave B up there and wave C down here. So today in the New York Live, we are achieving that wave A. By tomorrow, maybe in the next 2 or 3 sessions, we got wave B and C. That brings us to the end of this week. Nicely poised for February rally then. All right. So the larger degree trend is up with the 5 wave uh, movement on the higher side. We are within it's actually a minute degree. It's not even high, much higher degree. We are talking about minor 5 waves actually, 5 waves of a minor degree up there. So we've got minute wave one. We are working towards minute wave two, and then three, four, five on the north side. Okay, so much ground still need to be covered, and we'll try and catch up each small wave as we are doing it right now in an aggressive manner as well. So you can trade aggressively if you choose to. All right. So that's the story for the euro. Uh, Counter trend continues. Positional long orders are also in place. The dollar index. Okay, you can see that price action catching up. Last session it was not. So we need to reduce this wave, and maybe I'll push this on the right hand side. This is what is expected now. It is really amazing to see how the blanks are being filled by the price action, and the wave theory and the counts, when you're doing it right, it really fills them all. And we have seen this happen many times now in the past 3 weeks that we've been together. So if you try and project the target, uh, it could be around 108.33. So aggressive traders, absolute aggressive traders who were long right there around 107 handle can keep your profits limit orders around 108 20 30, which is also the 38.2% retracement of the entire drop, and quite about near to the previous wave 4 as well. All right. For positional short traders, nothing needs to be done. We will sell or add again right around wave C completion. And for the short-term bearish traders, again we have already booked profits, so nothing needs to be done. This is only for the short-term aggressive traders who want to play counter trend and capture those couple hundred points on the north side. All right, want to really keep themselves busy both sides. It's for them. All right, that's the dollar index. Long-term trend remains lower. Counter trend into play as per the script. And so three instruments, what, gold, euro, and the dollar index are playing absolutely as per the script that we've just discussed in the previous, I think, all across the previous week, except for one bad push for gold. But after that, much was covered there as well. That's a fantastic way to tell us a story that, okay, we've done wave three, we are now sideways wave four. That needs to be cut off actually. Wave three is not extending. Okay, we had suggested two possibilities. One is the third wave extending, and the other one is uh, the first impulse in place. So that looks like the first impulse is going to be in place soon. Remember the first option we were discussing as a triangle. So now we've got A, B, C, maybe flat, or a D and E. A triangle would complete. And let's project the first. Let's project the next Fibonacci target for gold to hit. I'm taking a hypothetical wave for termination right here, and it is projecting towards 2712. think that trade is complete. Let's remove it. For those who are still wanting to go on another short drive, can but we got to look into the risk reward ratio. I mean, if we go and sell right now, the minimum stop loss goes to 72, or indeed it should be 75. So that is 30 points, and okay, another 30 points lower. So again, it's a 1:1 risk reward ratio. Not a bad deal at all. Intraday, intraday short term, we can define it as the trade style. Short at 27.45, stop at 27.75, and target around 27.1015. All right, that's an intraday short-term trade setup, which would then complete the first wave, and possibly we'll have a pullback and get another chance to enter. But you know what? If we try and project what is in store ahead, then we can do that as well. I mean, a hypothetical extension of gold there, and now we need to look at the higher degree projections, which is pointing towards 2587. So we are already the next leg. So see the beauty of what charts are like, and what waves can tell us a story, and what are the next steps in terms of price action and time as well. Because the price action we can confirm with about 85% probability that gold is heading, the next wave three is heading towards 2567, and if we project one more wave theory or one more extension, that would be the fifth wave extension as well. But we are not wanting to do that, because in case the third wave is extended, that target will go much lower. It's not going to end at 2567. But at least we've got a rough idea where the metal is heading in the next few weeks. At least what we discussed were about 4 to 12 weeks, right? So it gives us a fair amount of idea where gold is heading lower, and up to what magnitude actually. So if it drops towards 56, no, not 56 actually, I removed that, 2567 somewhere, 2567, then we're already pretty close to that particular low, I think, 2544, right? It's just about a couple of more waves to follow through after that. All right, so the first wave is just about to get complete on the south side. It's a good news for us actually. We can we can find out uh, another entry order and take it on the short side for a bit more longer period going forward. All right, so the gold story is also intact for now, at least on the sell side. The bottom line remains prices should stay ideally below 2785 for base to remain in control. That's the objectivity. All right, sir, and let's pick up coins first. I was being a bit skeptical on the 4-hour chart, previous two sessions. Let me bring it down to an hourly chart, because it is quite possible that the first leading diagonal is complete, and prices might want to dig lower. So an aggressive short taken here, I'm not saying it's completely wrong, but it's quite possible that prices may actually not go to 96, but it may retrace. It is quite possible it may just retrace it towards 99 and reverse from there. But if you look at the 15 minutes time frame and a slightly deeper look at what we are seeing here, it's that is one or two and then five waves. So it's a three up X wave and one, two, three, four, and five possibly. It could be a leading diagonal, or it could be, but given a chance, it could also be a leading diagonal. That's what worries me a bit on the short side while we're standing on the short side. It's recommended to get out of the shorts right now and prepare to go long on retracement. There is a there is a chance of a retracement uh, with the RSI dropping back towards the 30 mark. So we'll figure out the retracement levels, and we'll go partial longs. 99 and the other one will be 96, just in case if it wants to complete that five wave decline. Okay, so let's get rid of the shorts. Please get out of the shorts. I mean, taking a short term pain is always better than long term pain. Uh, Potential long around the 99,000, 96,000 zone. That is just below that mark, right? And we'll keep our stop loss below that 89. Stop loss is 89. So let's take one long with confidence in Bitcoin and targeting 115 at least, and 123. That's the next target, right? So let's hold on to the long side for now with that larger degree wave one, ABC wave two, and price is now beginning to cut loose on the north side again. Ethereum, I think it's better than yeah. Ethereum is also, we would like to stay on the long side, but we keep a stop loss around just below the 3,000, 29,000 could be the stop loss. So let's find out an entry here as well. We've got the first, uh, I think the first impulse move. So what we need to do is find out a retracement for a pullback, and that comes to 3100 roughly, correct? 29 stop, 3100 entry, and 43 target. That's the trade for Ethereum. In fact, what we can do is we can take the target of this particular impulse wave as well and see where it is heading. That is 35 and 37 maybe, 36 actually. So the risk reward ratio is still good enough even if we trade this cycle, this particular cycle, correct? Okay, next is Solana. Solana is 5 down, 1, 2, 3, maybe wave 4 is still working. Doesn't look like a leading diagonal yet. So maybe Solana might dip one more time around the 220 mark. Let me have a look at the entire boundary. The risk reward ratio is what we are simply concerned, because 169 is too far. If Solana drops towards 217, that could be an entry point with 169 target, which is 30 and 40, 50 points of risk, and 314, which is almost 100 points of reward. That looks a risk good risk reward ratio. So maybe you can go and buy around two, what is it, 217. So that's 220. Stop around 170, and the next target is 315, correct? I think that's what we had seen, 314. Okay, so no rush right now, and finally Ripple. Ripple has sold actually, but we need to have a pullback. We need to see a pullback. 1, 2, 3, 4, and 5. That's an impulse. Let's find out an entry. 2.84, stop 2.6, and target 3.7. And target 3.7. So these are the last legs which we would still like to take it up if the entries are triggered. We have not done any market buy, we have just placed the limit orders. If the entries are triggered and the risk reward ratio still looks okay to go and target those higher levels. All right, we'll come back and touch base with the indices in the New York session. For now, I think we're quite a bit into the trades, short in gold, short in euro, aggressive shorts in both, aggressive long in the dollar. Positionally, we are opposite, and then we are opposite now. We are long, mostly ready to go another leg long in the coins. All right, so it would be interesting to see how the price action shapes up in the next few hours from now. All right, so with that note, let's bring it a pause here, and thank you again for tuning in. We'll be back again in about less than 4 hours in the New York Open. Until that, I would like to hand it over to Ego. Back to you, brother. Thank you.
Thank you, SPDas. Always a pleasure.
Thank you very much.
Alrighty, folks. Thanks for tuning in for the London Live. That was a lot of fun. I took a lot of notes, and yeah, those wave counts are like just like a time machine. See if I can get this working here. Nice. Yeah, it's like it's going if you study the charts and you go back in time and you start applying wave counts, you'll see it like over and over and over again. It's just amazing, amazing to watch, amazing to continue to practice, right? And what I appreciate about SPDas as well is most of the time he doesn't even really need to like apply the Fibonacci, the Fib tool. He'll just plot it like with his like mind's eye at first and draw the estimated points, and then he'll draw the Fib tool and he just gets it. He gets all the levels, and I'm like, that's nice. Maybe some micro adjustments, but I just love seeing that. It makes me happy. It's the same thing with like when you're drawing or painting or whatever, and you know the golden ratio, and you could just automatically, or if you're a photographer, you could just automatically frame a shot using the ratio. I just love that. I love applying it, and I love seeing others apply it. Yeah, anyways, I'm not going to be talking too much. We've got a really busy day, lots of trading action, lots of live session action coming up. 8 a.m. With IT Trader, Smart Money, Institutional Trading, and then back with SPDas, we're going to cover some of the US markets. Yeah, always looking forward to all this stuff. If you're watching this, please like our post or like this live session. It really helps us. Just get spread the word. Let people know uh, you're watching these. What else is there? Not much else. Uh, I'm probably going to do a little bit less updates during the live session, and we'll schedule an actual kind of like a dedicated stream for updates. Might be impromptu, but we'll always what's it called? Still morning for me. Okay, my brain is still activating. Um, yeah, we'll probably I don't want to commit to a date like a Friday, but probably Fridays makes the most sense just to kind of like a recap of the week. Um, what's what I'm having a lot of fun with right now is the actual financial assistant LLMs, uh, uh, tying them all together, right? So you could chat to it and just pretty much get all the information in real time. I love that, especially from the live sessions, from the trade ideas, from the time series analysis. Yeah, it's really coming together. It's gonna blow people away, and I'm loving that. Thanks for tuning in. We'll see you in New York live in just a few hours.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at ForexLens.com. Get the edge on trades. Your eye into the markets. ForexLens.com.